Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Friday, August 2nd, 2013. Thank you all for tuning in. Let's jump right into the charts here. We're going to start off with the S&P 500 E-mini futures as usual. What you'll see here is the futures are starting to tick down just a little bit off the highs. They are basically flat on the session right now at around 1,700. The job number was just released. The Labor Department just released the non-farm payroll report for the month of July. Looks like the job number came in at 162,000. The truth of the matter is, the number's horrible. They were expecting 184,000. The whisper number was for a move to around 210,000. Goldman Sachs had predicted over 200,000. 162,000. It really just doesn't keep up with the rate of inflation. But either way you slice it or dice it, E-minis are starting to fall a little bit. You see the futures coming down just a tad. This is a Friday. Normally we look for a flat to slightly positive trading day on a Friday anyway, so I think that's what we will ultimately wind up with. But here is what I think traders should focus on. At least this is what I will be focusing on. Dollar yen. Now the dollar yen chart is only down today about 19 cents. But considering where it traded the high before, the news up here, the dollar yen was trading at 99.93. Now it's trading at 99.30 and fluctuating pretty quickly. This rapid decline comes after the job number was reported, and if this starts to fall, the market starts to fall. Remember, all the people that are buying the stock market right now are not people like the guy at home with an E-Trade account. These are institutional traders that are very highly leveraged. And what happens is, if the yen continues to go lower, which is the way they're betting, they take that leverage money and they buy the S&P 500, they buy the Nasdaq, they buy the Dow Jones, they buy the Russell 2000. If this goes down, they can't buy that. So this is how it works. That's why it's so important for Ben Bernanke right now to keep the liquidity into the system. As long as he keeps liquidity into the system, this dollar-yen trade can continue to go higher. The higher the dollar-yen goes means the lower the Japanese yen currency gets, the more it gets devalued, and the more that carry trade continues to work. So basically, in a nutshell, if this goes down, so does the stock market. That's basically how it goes. Yesterday, you could take a look at the dollar-yen. Dollar-yen was soaring higher. Just continued to climb, and so did the stock market. The market didn't even care about bond yields yesterday, which were making a pretty sizable move higher. Today, bond yields are somewhere around new highs, but the market really didn't care about that yesterday. The market only cared about that dollar-yen. Today, bond yields are trading at around 2.75%, the highest yield we've had in over a year. So again, that dollar-yen chart is dominating things right now. I think this is what people will want to focus on mostly. Okay, if this goes down, generally the stock market will go down. It may not go down today on a Friday because volume trends are going to be very, very light in the summertime after the first couple of hours, but it will go down eventually. All right, let's take a look at a few other things out here this morning. One, looks like the Dell deal is done. I don't know the specifics. If you want to know it, go ahead and look at it. But it looks like the Dell deal is done. I'm not even sure where they settled on, but who really cares about Dell at this stage of the game? It's not really a major market mover. It doesn't really have, and I'm just glad to get this chapter of Dell behind us and get it off the stock market. There are some earnings out here. I believe Chevron came out with earnings. The stock was up. Now it's down, settling in right around 125.85. The stock did close at 126.44 yesterday, but that is not a good showing. And I got to say, between ExxonMobil yesterday and Chevron today, the dollar is just hurting these stocks. I just don't get it, but the earnings have been really not very, very good. And for the most part, earnings in general, outside of quantitative easing, haven't been good for the market either way, because most companies have been missing on their top line, which is revenue. Not that we care about earnings, but it's always good to take a peek inside and just see exactly what's going on out there. Looking at a few other things this morning, I think we have to go back to Japan last night. If you take a look at the Japanese Nikkei 225, had a soaring and roaring move to the upside. I'm just going to punch in the daily chart, and you'll see that, let me just get rid of these lines, a big pop last night, up over 3%. That's all on the weaker yen. So when the dollar yen chart starts to go higher, that benefits the Nikkei 225. And you can see Nikkei 225 had a huge move. Now the Shanghai Composite was flat as a board last night. Couldn't get out of its own way. Didn't do anything. This chart is looking more and more negative the more I stare at it. So again, I just don't see Chinese strength right now. But either way, we'll just have to see how the market reacts going forward. But I think right now the dollar yen chart is the most important chart that anyone can follow going forward. Looking at a few things here, you want to take a look at the European markets this morning. They are basically flat. The FTSE MIB, which is Italy, that is down about 0.5%. When we look over at the U.S. markets today, we do have gold taking a pretty big hit. So gold is down sizably, down about 24 points at the moment. Gold may get a bid, though, if the U.S. dollar starts to fall and the dollar yen starts to fall. So gold is down decently this morning. You can take a look here at the GLD. You get a good little proxy, but it is now popping up after that economic news or the Labor Department non-farm payroll report was released. Gold has caught a bid. So even though gold is down this morning, down about, I believe it's 20 points or so, but it will catch a bid if this dollar yen starts to come down. Remember, it's all about a carry trade. It's all about leverage money. That's what it's all coming down to. Nothing more. This chart goes lower, gold should go higher. That's the bottom line. It's just that simple. Taking a look at oil this morning, oil is down just a little bit. Not down really all that much. Right now, we have light sweet crude trading. Well, light sweet crude is actually flat on the session now, 107.90. So light sweet crude is actually flat on the session to 107.90. So we're not going to make too much out of that. I take that back. Light sweet crude is now falling. Pretty good action. Light sweet crude is now falling by 60 cents to 107.29. 107.29. That's a live quote. So light sweet crude is now falling by 60 cents to 107.29. That's all about dollar yen. You saw crude rally up. Crude's not rallying up yesterday because it's strong. Crude's rallying up because of the currency. Okay, today dollar yen is starting to fall. And look at crude. Take a look at the USO right now. And you start to see the USO. Look how that's starting to dip. So again, crude declining right after the Labor Department job number. And again, I hate to say it and harp on this so much, but it's all about the dollar yen chart. I can't say it more emphatically than I have been. There are a few earnings out here, quite a few earnings out here. AIG is a company in the news. Again, this stock back in 2009 did a 20-for-1 reverse split. So again, don't make too much out of it. It's theoretically $4, $4.90, but or even less. But right now, the stock's getting a good reaction to earnings. Closed at 47. It's trading at 49. I don't know if it really even has much upside. There's not much I would do with AIG right now. Another name in the news is Mercado Libre. Big pop yesterday after earnings. Right now settling in about 16 points higher to around 138. Pretty big move. I'm not sure if we're going to play that one today, but I have a bunch of gap plays for us. Weight Watchers, I have a level for this one. This stock is absolutely hammered. Closed at 47 today. It's trading at $40. But I do have some support levels for Weight Watchers should it get down there. Another stock that was very strong last night after earnings report was LinkedIn. LinkedIn, I would not be a buyer up here. I don't know if it trades a little bit higher, but don't chase it. It is way overcooked at these levels. So LinkedIn is another one. But we're going to have quite a few earnings plays out here this morning. So if you want those earnings, you want those morning gap plays, please come over to the chat room. We'll have those posted right at 9 o'clock in the morning. With that said, everybody, I'm going to leave it there short and sweet. Again, non-farm payrolls are out. Futures are only down 1.5 points. We're not going to expect a big decline in the futures today because it's a Friday. Last Friday, the market reversed all of its losses, really to close positive by the end of the day. And that's what you got to look for on a Friday. The institutions that run the stock market, they want the markets to close flat to slightly positive each and every Friday, so it causes no fear in the average person that doesn't know what's really going on behind the scenes. So again, expect a flat to slightly positive day for the market today. I will see you all on the charts a little bit later. Have a great day, everyone.